Hello everyone, this is Andrew McNair from SWAN Capital with our informational economic update for December 2016. In this month's video, we're going to be discussing some major headlines that influence markets in November and provide you some insight into what it might mean for you as an investor. Now, as always, please stay tuned at the end for a required disclosure statement. So looking back on November, no one can argue that it was a boring month. After a long, exhausting presidential campaign, the election day brought results that few people were expecting. See, just that day, the New York Times had given Hillary Clinton an 85% likelihood of winning based on number of state and national polls. And we all know how that story actually played out. And what might be even more surprising than Donald Trump's victory is how the markets responded. See, rather than experiencing sell-offs that many experts predicted, the major indices have shown tremendous growth since the election. In fact, the Dow added 1,000 points in November and went above 19,000 points for the first time ever. The S&P 500 and the NASDAQ also reached record highs last month, and the noteworthy market increases are just a few of the positive economic indicators that we saw in November rise. Now, in last month's video, I talked a lot about GDP, gross domestic product, and that it's had its biggest gain in 2 years, showing that the economy was growing a lot faster than most economists expected. Now, when the government released its revised GDP numbers in November, they also revealed that the economy grew even faster than previously thought. After years of sluggish growth, we're happy to see the economy finally picking up its pace once again. The employment picture is also showing an equally positive outlook. Unemployment remains low, and personal incomes have gained another 0.6% in October. So if you look at the whole year, the annual rate is incomes are up 5%. That means Americans have more money in their pockets, which will likely increase how much they spend. Now, consumer spending is already up 4.2% over last year, and we anticipate it's going to continue to grow thanks to greater personal incomes and lower unemployment. Now, since consumer spending accounts for 2/3 of GDP, the combination of strong employment, wages, and spending could help advance our economy even faster. And we expect a rising income and consumer spending to result in solid holiday shopping season. And we'll keep you up to date in our January update. Now, on November 30th, though, OPEC, the cartel of the oil producing countries, agreed to at least somewhat limit their supply to the market in hopes of driving crude oil prices above their current low levels. And as a result, you may experience high gas prices in the coming months. But we really don't anticipate crude oil actually rising near like record highs of 2008, which were nearly 3 times what they are today. Now, these days, the U.S. and the countries outside of OPEC produce more oil than in the past, which helps keep these prices lower than during the Great Recessionary period. Now, as we look across the data for November and as 2016 as a whole, we believe the economy is continuing to strengthen. All signs currently point to this. See, the Federal Reserve raising interest rates in December, that's not a bad sign. Yes, the market may face some headwinds ahead, but again, if we can expect a rise from the FOMC meeting like we did, we can see a lot of confidence there. So between the Brexit, the U.S. presidential election, it's reminded us again and again, no one can predict the future. But I'm happy that recent economic reports show that we're doing well and we have a lot to be thankful for. Now, that's it for this month's informational economic update. Remember that we have our January 26th State of the Markets event coming up, which is one of the 2 educational workshops that we give to our clients to keep them up to date with the market and the economy. So you don't want to miss it. RSVP as soon as you can. Again, thank you for watching this month's video, and we look forward to seeing you on January's monthly market recap. See you then.